Thank you, yes, and welcome all of you to our offices here at Bloomberg in Sydney. So, as I've said, we've had the introduction, I'm from Bloomberg Intelligence, and that's Bloomberg's research arm. We have a team of 400 of us globally that is covering the equity markets, the associated industries, including mining, as well as fixed income, currency, commodities, and economics. The way our service works, it is a complimentary service available to the subscribers of the Bloomberg terminal. So if you're subscribers and you'd like to access more of our research, or you'd like to explore how to access that through subscriptions, please contact one of our Bloomberg representatives after the presentation. In terms of the lithium prices, we all know since the end of the year we've had these large declines in both the price of lithium chemicals and also in the spodumene price, so the hard rock that many of the miners produce. So we've looked at about halving of the hydroxide price, which is that white line, a key chemical used for battery production, and particularly for electric vehicles. And we've had about a third decline on the spodumene price, the 6%, which is the one that is benchmarked for many of the Australian producers. And the reason for this primarily is that there are major concerns over all the supply that's come online. So we all know that there's a very strong case for electrification and vehicles to create massive long-term battery demand. I think that's without doubt. But the response to that has been some big increase in supply, and that is where some of the concerns have come from over surpluses in the immediate term at least. That's this chart here. So these are some numbers. Many of these numbers are from Wood Mackenzie. And we can see if we look in 2020 to 2022, the blue line exceeding the orange line, meaning demand deficits, has now in 2023 moved to surplus because of that large bump coming from the big producers. A lot of that is the Australian producers, your IGOs and your Pilbara Minerals, for example, who've added a lot of spodumene supply. Now, what will happen is that over the next few years, the massive ramp up in demand, that blue line, should cause things to normalise. And in fact, you should eventually end up back in a deficit by 2026. We also think that these assumptions around price are actually potentially a bit conservative because of some of the factors here, which I'll outline. One in terms of how the cost curves look over that period, but also some of the good signs of demand that we're seeing out of China. So this is a hydroxide. There is another one for carbonate, but I'm going to focus on a hydroxide because it is the key chemical used for battery production. And you can see with the blue and the orange line, this is the spodumene production that we talked about. So this is really where the Australian miners come in. What you can see on the far right-hand side of the curve here is the brine and carbonate production. That's a lot of that's coming offshore. The key thing to note when you're looking at this chart is that, and this is out to 2025, that the marginal price is generally set by, the price is generally set by the marginal production, which is going to be at the more expensive brine and carbonate rather than the spodumene producers. And what that means is that because mining for lithium tends to be less expensive, those producers should be able to secure pretty strong margins regardless of what happens with that far right end. So obviously it's a challenge, as we saw in the previous slide, with that extra production coming on. But the good news for these Australian producers is that they are producing at the low end of costs. Okay, so now I'm just going to switch over to the demand side. And this is where, in the near term, we are seeing some more positive signs. So there was a big drop off in demand in January. Part of that's seasonal, part of that's other factors. But we have seen in February and March an increase in EV sales. This EV sales are the majority of lithium demand. And you can see that around 2/3 of the demand is from China. The blue bar there is China demand, and the rest is from North America, Europe, and other countries. Now, where this demand is coming from is that we are starting to see some positive signs. Our auto analyst, Asia Pac auto analyst, is forecasting a big increase in 2023 of vehicle demand out of China. A couple of reasons. Obviously the reopening is leading to some economic growth, and they are retaining the incentives around tax, and there are some new models coming out. So there is a bit of optimism that we could see an increase or a continuation of the demand recovery, which I think would be a positive sign and may not necessarily be fully priced into those demand assumptions that we're seeing right now. And now this was the long-term slide. So I guess this one comes down to more of the big picture for lithium. Yes, we are certainly experiencing a short-term period of consolidation in the price as that new supply comes online. But this is the long-term demand picture as outlined by what is required for electrification and what is basically being implied by the policy approaches from most major governments. And that is, so you can see 2022, we're right on the left-hand side. That 2050 represents a 540% increase in the demand for lithium. The majority of that is from electric vehicle batteries. So really, this will depend on the continued trend that we're seeing of electrification, requirement for electric vehicles, and generally the take-up of that as a method of transportation. This does assume that around 3/4 of vehicles become electric vehicles by around the mid-2030s. And then from then on, that plateaus there at around the 75% mark, with the remainder being ICE, internal combustion engine vehicles. So that's the overall presentation. Very concise. Obviously, forecasting prices is fraud, as we all know, but hopefully a few things to think about as some of the scenarios that could play out over the next couple of years. If you have any further questions about our service or our presentation, or what's successful in the Bloomberg terminal, please contact one of our Bloomberg representatives who should be here for the preso. Thanks very much.